Okay, let's talk more about interest rates. What is going on with interest rates? So, the Federal Reserve has the power to set the interest rate that they charge banks who borrow money from them. The banks, in turn, lend money to everyone else, so they have to charge more. So if the Fed rate was 0, a bank might charge you 3% for a mortgage, right? If the Fed rate is 3 or 4, which it looks like we're somewhere in that zone right now, then they're going to charge you, 6 to 7% interest because they have to make money on top of the money they're paying to the Fed. So that's how the Federal Reserve has power to affect your mortgage rate. They're not directly affecting your mortgage rate necessarily, they're affecting lending in general. And then anyone in the lending world is affected because now it's more expensive for them to borrow money and more expensive for them to lend you money. So they have to make up the difference. So right now, the Fed is raising rates in order to slow down the economy because of inflation. So this is one of their main tools for doing it, and it hits housing first. It hits anyone first that is actively in the business of doing financing, which most people that buy houses are getting loans for those houses. So the housing market's going to feel it first. We don't know for sure when the Fed is going to pivot, meaning when they're going to say, okay, we've raised rates enough, we're going to coast for a while, or eventually when they say, okay, we've gone as high as we need to go, we can start to go back down. We don't know when they're going to do that, but the rates that are offered on mortgages will be affected on a daily or weekly basis depending on where the Fed currently is and how banks are handling that. If interest rates stay higher, banks will be looking to do more programs, maybe more incentives, looking for more zero down options, trying to get people into houses. You should think about asking a seller for an interest rate buy down to lower your rate. We have other videos talking about that, so check those out because there are options in times of higher interest rates. People want to buy houses. There's pent-up demand. Rental prices are going to be getting higher as inflation gets higher or as interest rates get higher. So people are going to be looking for ways to do it. I think right now people are waiting to see what's going to happen, and we might have some clear direction from the Fed over the next month or two. But the market will eventually balance out. Right now, the Fed's just in a brief moment of aggressively trying to tackle inflation, and the way they do that is by raising interest rates and increasing the cost of borrowing in general.